I know why you're here. I've been trading for 11 years. And let me tell you something. I have failed. I have blown accounts. I have broken shit. I did a lot of things, but hear me out. You have to embrace the setbacks and not be defined by them. Understand that failure is gonna be a part of your process. Instead of giving up like a little girl, refine your strategy and keep moving forward. You gotta be equipped with the right tools too. Understand that in this strategy, you're gonna understand risk management and the proven strategies to do this long term. But you also gotta be focused on the bigger picture. Understand that your future self, if he was watching this right now, he'll tell you stop living from paycheck to paycheck and boss up. You also gotta adapt and learn and stay ahead. Understand that back testing is gonna be key, and you're really in control of everything that's gonna happen with your growth, but you gotta be ready to adapt and move forward throughout this whole process. Understand that with everything that I'm telling you, we're gonna be locked in and ensuring, making sure that you become that best version of yourself with this trading process.
Alrighty, so some of the time frames that I do go ahead and use to kind of make sure that I have a clarity, you can see they're all pretty much listed up here. You have your monthly, weekly, and daily, which is going to be your main time frames for your main market structure. This is what the market structure movements are actually doing. Then you have your 12-hour through your 1 hour. This is where you actually are in the move. This is where you are actually in the move. Then you have your 45 through your 1 minute. This is actually basically where you're going to look for your entry. So essentially, this is what it would look like, right? You're gonna have your main trend that looks something like this. This is what's gonna be on the monthly, weekly, and daily. Then you're gonna have your time frames in between. These are your analyzing time frames. These are gonna be your 12-hour through your 1 hour. And essentially, what you're looking for on this is actually where you are in the move within the move, essentially, right? And then it looks something like that. We'll go ahead and change the color so that way you get a better understanding, something along the lines of this. We'll make it in red. You can see the move within the move. Then you have your 45 minute through your 1 minute. These are predominantly going to be on the lower time frame. These are going to be the microstructures, the lower time frame conditions that you get the small breaks, so you get the best risk for your reward when it comes to entry. These are the time frames that you're going to enter on, so that way you buy when it's low, and then you buy when it's low on the lowest time frame. Pretty much you get the best risk to reward possible. So essentially, when I first hop on the charts, the very first thing I'm going to do is I'm going to look for the market conditions. The market conditions from your analyzing time frames, which your monthly, weekly, and daily matters. Predominantly, mainly your daily, right? Because your daily is what happened most recently, so you can begin to pick up exactly where you left off. You can see currently where we're at with GJ as of right now. We're overall in an uptrend, but we're in an uptrend with a range. So what we want to do is we want to draw market structure accordingly, so that way we can understand where we are. You could see that in this example, right? We're in somewhat not of a uptrend, right? But then when we get up here to these highs, we begin to facilitate the actual ranging markets to where we're not going higher than this previous high over here, but we're beginning to make highs and lows within the trend. This is important because when you're in a ranging market, you want to buy when it's low and sell when it's high, so that way you have the best optimal entry. And you can see in this situation, within this range, we have not come and broken past this previous low area. Boom. We can go into a little bit more detail. You can see this previous low point down here. If I was supposed to draw a zone from body to wick down here and I stretch it from left to right, you can see that price went ahead and tapped what we call this supply zone, or should I say demand zone, right? Because demand is going to be the area of support. We tapped the demand zone, and the very first interaction with it that we had in a long time, we rejected. When we combine that with structure, we're able to kind of see the optimal areas that we're potentially looking out for as far as for market structure. You can only get this if you use market structure and demand zones. You can add more confluences to this to make it more stronger, which increases the probabilities of the trade trending out in your direction. But what's really going to be the main key is seeing the structure, seeing the previous areas that we were at to make sure that we understand we could have a potential interaction with this area, so that way we could set ourselves up to, again, watch it happen, then make it happen. So some of the tools that I use, and we'll walk through it over here on the toolbar, some of the tools that I use are going to be like the trend line tool, right? This trend line tool, I don't actually use it for trend lines. I use it to actually mark off where buyers take over or where sellers take over. This tool is almost like one of your main drawing tools that you can kind of use, right? I kind of use this to kind of highlight certain areas. We have the horizontal line tool. I use this to kind of mark off my support and my resistance areas. You can see right around here that I just dropped one off, and it's just a little line that kind of goes from left to right. And essentially what this line is supposed to signify, like we can see right here that right here, basically where we are with price action, if I hit the settings icon, which I don't know why it's not working, settings isn't popping up, but normally when settings pops up, you can go ahead and log the coordinates. Don't know what's going on, so we'll kind of get it as precise as possible. But QPs are institutional, fundamental, and technical support and resistance. We'll get it as close as possible. But essentially, when you hit that setting icon, you're supposed to be able to kind of get it. So you can see right here that we have 2 areas of support. This is the most recent. This is the current. This is supposed to be 500. We're at 510, but you get it. And essentially, if we break this, we're supposed to continue and go to the next area. Outside of this, I use the rate tool probably like when I mark off an entry. Like for example, you see how we gapped up? I'm anticipating that we should come back down, but obviously spread is kind of high right now, so we're not going to actually look to buy. But in the example, let's just say we come back all the way down here and we retest. I would use this rate tool to mark off entry and exit, which will lead me into the next tool that I go ahead and use. I use the long position to calculate my risk to reward. So let's say I entered here and my stop loss is down here. It would look like for me something along the lines of this, and then we would drag it up. If we took this trade from last week, essentially we would be floating 82 pips, and you can see the risk to reward, how it kind of pans out and how it looks, right? We risk 20 pips to get 82 pips, and the risk to reward ratio is a 3.9, which is basically almost like a 1 to 4. You always want to add a 1 in front of the number because it's based off of entry. So this essentially would be like almost a 1 to 3 or a 1 to 4. The more entries, the more numbers you add in. Outside of that, the next tool that I use is obviously Fibonacci, right? Fibonacci. You can see it here, and you can see, long story short, the levels, if you know, you know, they're color coordinated to the T for a reason. These colors are not for no reason. What we'll look at next within this family as well, I don't really use anything too much. I use fib expansions, but this is a little bit more advanced. But this is another tool that we use. This is only for the advanced people. You can see that we're disrespecting the QP, which means that we're gonna potentially go down. I don't use none of these wave pattern shits, not to diss anybody or anything like that. I don't use those shits at all. I use the long, the short, pretty much from here, and the price range tool. For anybody who doesn't know how to read pips, it's very simple. Use the price range tool and you kind of range and drag it up. So literally from here to here, it would be 25 pips. You can see that the big fat blue 25 right there, it kind of signifies it. Very simple, very easy. So from here to here, this is 25 pips. You kind of get the gist with that tool there. Going down to the next, I don't use anything else from here. This is where it gets kind of lit because you can get as creative as possible. The arrow tool, I like to use this for trend lines. Boom, you can see here that we're addressing the slope of a trend. The next tool that I actually use in here is one of my favorite, which is the polyline tool. I use this to kind of illustrate my market structure, right? And there's another tool that I combine with this when I have my Fibonacci sequences that line up to kind of make it make sense within structure. But you can see me drawing market structure and everything, and then you can see kind of going up. You can see here that we ended up breaking the trend line, retesting the trend line, and then exploding off, right? When I combine this with the Eclipse tool, right, it kind of lets me know. Obviously, I'm in the uptrend, and this was a downtrend. So if I was supposed to actually be doing this for real, this would be in red to let me know that this was a downtrend. And in this part that we broke the trend line right here, this would be in green. I would actually be highlighting these areas at the peaks, and I'll be making them in red with the Eclipse tool to signify that, boom, this is a market structure area. But I would only do that once I have alignment with my fibs. And then boom, you can see right here that we broke, making this high, and then this is the first high or low. So then boom, this would be a high, right? Because we actually broke this previous lower high right here. So let me kind of show you exactly what I'm talking about. This was the lowest point in the market that we came, right? And then buyers kind of came and kind of did the transition. So you can see here that from here, this first spike up right around here, if I was just kind of delete it and show you guys, right? And stop being fucking lazy, excuse my French. You would be able to see right here that boom, we have boom, 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 boom. Right around here, this is exactly where the downtrend ended at. So we would double click on the Eclipse tool, we would end it there, and then we would start drawing. We would draw with the same color essentially, and then once we're done, we would change the color. You can see here that we got a retest of the QP, and goddamn, we're going long, so we're gonna go even higher, shouldn't we? And then boom, we would do it in green like this. You can see the green is gonna kind of illustrate the new trend that we went ahead and began from there. Outside of that, the arrow, I kind of use this like, you know, when I'm pointing at things or when I want to kind of point out to certain areas. It is what you make it with that tool, right? The trend line tool. We have box to kind of draw supply and demand zones. So this is kind of key as well. I draw them from body to wick, but we'll go into details on that a little bit better. You can see here that boom, we broke right here. We retested here, and then we kind of shot up. What else do I use? I use the Eclipse tool. use the rectangle tool, use the arrow tool. I think I covered everything in here. Boom, right around in here, I probably use the call out tool the most to kind of label areas. So like you'll see me, I'll label this area like HL, like I know that this is a higher low, and then I'll put it right here, and obviously higher high. I'll kind of use this for like labeling purposes, and then boom. So we got, let me see. My pre-market checklist is like, okay, do I have market structure? Yes. Did we do a transition of trend? Yes. Do I have a QP basically where we entered at? Yes, the 750 QP is there. As you can see before, the 500 is here. So yes, QP criteria, yes. So we broke a QP, we respected that support, boom. Same thing that we're kind of doing here, yes. Did we do a transition of trend? Yes. Are we at a higher low? Yes. Do I have a supply zone? Yes. Do I have a candlestick pattern? Yes. You can see right around here in the optimal area that we have what's called we have a lot of wicks, which signifies rejection. The wicks on the bottom are going to signify seller's exhaustion. The wicks on the bottom of a bullish candle are going to signify buyer's rejection. So you can see they both in agreement rejected this area that they should have based on what we transitioned. They rejected because they were retesting the area and then momentum took over. Boom. So you can see there, do I have a supply zone? Yes. Cool. Anything else outside of that, it is what you make it within these tools, right? Obviously the pencil tools to lock it so you stay in drawing mode. This is to kind of lock it. Boom. Sometimes you want to get naked. This is like my favorite part. It's like looking at somebody naked, your favorite person naked. You get it? But yeah, throwing back on the technicals on there. So we got market structure, we got trend lines, we got zones, we got QPs, and everything of the such. So those are pretty much my pre-market conditions, making sure that I understand what I'm looking at with the technicals and letting the technicals actually speak to me so that way I'm able to sit on my hands. You can see on this bigger time frame here that essentially, right, like we're in an uptrend, but we already made the higher low from here. So this will just be getting what we call a continuation trade from here to kind of go up. But we'll go into that later details. All right, so some of my rules for my entries are gonna look something similar like this, right? So obviously you can see down here in this example, we have a trend, right? If we back out a little bit to a little bit of a higher entry time frame, you can see that we have 10 minutes. We already made essentially in this overall trend, we already made a higher high here and we're coming back to make a higher low here. So essentially you're gonna have to be able to kind of understand where you are within structure very keenly. So if we start from right here to where we first started the transition of trend, you'll be able to see it kind of clearly to where we came, boom, 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 boom. So you can see right around here, this is the previous high. So this is where the anticipation and the patience kind of comes. You're waiting to see, are we going to retest these areas? That's one, right? You can see right around here that we did retest, signifying that this previous higher low did its job, and that right here is the entry area. On top of that, if we go down a little bit lower to our entry time frames, you can see that right here, if I was supposed to switch to the rectangle tool and I draw my supply and my demand zone within this pertinent area, you can see here that I have this rejection area based on body to wick within the area, and I draw it from left to right. This is going to give me a potential rejection area that I'm looking for an interaction of a trade to happen, kind of like a transition of trend. Obviously, the lower you go, the more details you're going to see. You can reshape it to the details on this time frame. You can tweak it. Like, for example, I tweaked it to here, making the rejection area that I'm looking for potentially smaller. Boom. And then what you're going to do is you're going to trap it in between two QPs. Essentially, if we respect two QPs, we're going to go instantly up to the next. The rule of thumb, though, is if we respect a QP as support, we're instantly going to go to the next QP. If we respect the QP as resistance, we're going to go down. So in this example, you can see up here, they're respecting this. So now we're going to go to the next QP down. And essentially, you're just watching it as it gets to these institutional areas, right? The next institutional area is from this 500 to right around here. Let me see, is settings working now? Are settings, are you going to be my friend? You're not going to be my friend. It's all good. So now we're going to reject and we're going to sit on our hands and watch. But because we just made a recent high up here, boom, we have a potential rejection area from here. So now for our entry, we're sitting on our hands and we're waiting, right? This is what I like to do. Then from down here, after the 250 QP, we have what we call our major QP, which is right around here. So all these are potential support and resistance areas to where the market can either act as support or act as resistance. We're using this in confluence to what we see as what we know as the trend, because we now gapped up and made a new higher high. So now we got to come back and either retest here, or we may come back and retest from where we originally started from. This is what we know as the gap. The market doesn't have to fill gaps because the market moves off of structure. If the market does come all the way down here, better for us. More risk for our fucking reward. We make more fucking bang on our buck. When it comes to actually risk management, here's what I do. If I'm starting off with a motherfucking $1,000 account, me, Druzy Banks, I could risk 10%. Am I gonna risk 10% right out the fucking gate? Maybe. It all depends on how confident I'm feeling in my setup and what I see in front of me in real fucking time based on the management. When it comes to management, as far as what a trade goes, let's just talk about some potential entries. Let's actually talk about the entry that is there in front of us, which is this right here. This sequence down here at the bottom gave me the ultimate sequence that I need to kind of take a trade setup. Why? Because we're bouncing off the zone, we broke the trend line, and then buyers are maintaining. So essentially, if what you want to do is you want to wait for after you transition the trend to get to a QP so you can enter off the QP and flow in the direction of trend. Is it always going to happen like that? Probably not. Probably you may get this retest where you may enter off this demand zone. Essentially, if you're buying, the lower you are when you're buying, the better it is because you're not going to risk as much. Because in a sense, this zone, your stop loss is supposed to be underneath this zone because your zone is like a range of price that's going to protect you. You can see in this defined range, we tapped it, one time over here, and then we kind of came back. Once we came back to it again over here, we kind of took off. If you even look at the structure over here, it'll kind of make things in the ambiance a little bit more better for you to understand and see because you can see over here that the higher highs and the higher lows were kind of maintained overall in this area of uptrend, making kind of key for us. Even when we came back to the previous high right here, all we did was just use it as a retest area and boom. So you really want to kind of pay attention to structure, but not the structure on one time frame. You want to combine the structure on multiple time frames to help weed out like where you are. Even when you get the choppiest of data, if the data is too choppy, zoom your ass out to one time frame up and don't be lazy. You can see that the sequence of the data is going to be the same and everything. But let's talk about entry criteria because that's what y'all really are here for. So let's just say theoretically we entered off this move right here. Boom. Spread puts us in right here. We entered. So now we're in the markets, we're live, everything of the such. I wish I could give you more of a better live example, but once you guys actually tap in for real, we'll be good. Boom. Right off the back, when you do that, you're going to drop this risk to reward tool, and this is the part where you're sitting on your fucking hands. This is the part where you're in the market and you're letting the market do the talking for you. This is the part where you're even going to learn where you're right. So I have two sayings, right? The saying is this: you're either gonna win and make money, or you're gonna learn how to make it even better. We don't take fucking losses. So any of y'all that are watching this shit, listen to me. We do not take losses. We take learning opportunities. We learn how to make the bag even fucking better. Don't say that loss shit. Don't speak that into your existence. You are not a loser. You are a winner. I want to make sure that's very clear. I have to get serious on y'all real quick. Back to the program. So boom, we're gonna come over here and we're gonna drag and pinch. Now you begin to kind of see what you're gonna use for risk to reward properties. You can see that as of right now, my inner circle team, which is if you join, you'll be here. They're submitting homework and they're submitting pre-market analysis. Let's kind of take a sidebar so you guys can take a peek at what y'all would get involved in. If we kind of minimize this, and team, if you're watching this, kind of clean this side up over here so they don't see all my personal business. But boom, you can see that my team is giving their pre-market breakdown according to how I trade. You can see the fibs, you can see the retest areas, you can see kind of all this juicy stuff. And this is kind of what we do when the markets are kind of right now, so that way we can kind of understand where we are. So you can see the technicals in real time. Back to over here, bro. So entry criteria, let's just say I enter here. You can see that, you see how it's coming back down here and retesting the QP. We're actually getting to that time, so I probably can call an entry in front of you guys. You know, you can see kind of retesting this zone. We're already starting to reject, so maybe this 250 QP may be the buy, maybe it may not, but let's just say this right here that we're looking at was the buy, right? We would buy right here. Now, essentially, I don't risk 20 pips. I like to keep that sweet spot between anywhere from 13 to 16 pips because I can take 3 entries within a session and still bounce back from that with a risk to reward for at least 60 to 70 pips. Now, my trading plan has evolved because I'm at a different stage in my process because I'm already going through this. You guys are at the beginning. So to start off, you want to look at everything in risk to reward. If you're going for 30 pips, essentially, you want to try to risk at least 10. So that way you have a 1 to 2. If you're going for 60 pips, you want to at least risk no more than like 18 pips. So at least you're targeting a 1 to 3. If you're going for 80 pips, you can risk at least 20 pips because you would keep it in alignment from going from a 1 to 3. It's all about what you're risking for your reward at the end of the day. And make sure that your stop losses, guys, are underneath your zones and at least underneath the QP. That means that your entry is going to have to be so fucking bomb that you're literally waiting and you're taking that risk on yourself. You can see right here that we're actually interacting from a zone, so I can see a potential setup happening. I'm still gonna sit on my hands. But let's just say if this 250 QP was being respected, what I would look for is something along the lines of price kind of solidifying itself here. Stop loss would have to be underneath this motherfucking zone, somewhere like around this. I would give the rejection area. I would flip through multiple time frames, seeing how big this rejection area is, so that way I can get it right. And essentially, if price is down here and I'm beginning to see rejection in this box, I'm gonna take the fucking trade. But it doesn't have to just respect this box. Look at it right here. We have all these areas over here to the left. So just because this is the highest one, it doesn't have to respect this. It can come back and respect this one. 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 So all these are potential areas. This one's is first because it's at the tippy top. So I hope this kind of helped you out with entries. It's the same thing for sells. We're taking from the peaks, but buys is right now, so I can only show you what's in front of me. Those are my entry criteria. I hope it makes sense. Make sure that your risking for reward is on point, and make sure that your risk management is on point. If I start with $1,000 account, I'm going to risk anywhere from 2%. Why? Just because it's not about the money. It's about making sure I'm consistent. It's about making sure I'm looking at it in pips. Do not look at the money. Look at the pips. I repeat this. Do not look at the money. You get paid from the markets in pips. I hope that resonates inside your soul. Anyways, pips. It's all about, that's how this game is going to pay you, is pips or points. If you trade indexes, it's points. If you trade pips, it's this. My pre-market checklist are these three pairs here. I just kind of upgraded to futures. So you can see a little futures. Beginners, if you're a beginner into this, look at AU. If you've been trading for some time and whatever the case may be, you can look at GU. GU's not here, but you could look at it, right? If you've been trading for some time and you feel like you got it, you could trade GJ, you could trade gold. Gold is like an AU and a GJ kind of match. Gold, you won't be able to get every optimal entry every day, but you can see even gold right now is playing out. You can see it's kind of rejecting, and we're just waiting. If it breaks here, we're going to kind of come down. Nazibu, you can see that Naz is kind of retesting this area right here. If I was supposed to show you, I could mark it up real quickly and kind of show you guys. We have a zone right here. We have a QP right around here at the 250 that we just most recently respected. You can see the structure a little bit, and I can begin to kind of almost illustrate. You got to remember, trading views your canvas. Use your fucking canvas. You are an artist like fucking Picasso. If you don't know how to draw, it's very simple. Use the template that Juicy Banks is showing you with the template and with the color tool to fucking draw. You can see the trend. You can see it bouncing off the trend. And you can see right now that I'm literally illustrating to you that we're in a pre-mini uptrend trying to go up. This is on the 1 hour. Let's look at double the amount of data. It's still saying the same thing, that we made a transition right here. We go down lower, it's still saying the same thing, that we made a transition. You probably want to realign your data right here and make sure that it's on point so that you understand what you see. A lot of this, if you do it in real time, it will make you better. It'll make you greater. I know some of us are going to have a fear of the market, and that's probably okay from where you are, but you got to learn how to beat that shit so that way you're even better. That's the only way you're going to get better. You can't be pussy. You got to jump into this shit. You can see here that the trend is kind of coming up. So potentially all these little points that I kind of drew in this little area are all potential areas that it could come back and retest, even though it's right here. We just actually disrespected a QP, which I'll draw it right here, which is the 750, which is right around here. We're using this as resistance. So what's in between that? We got a 500 QP that's right here in the middle that we may kind of come back to and retest right around here at this previous peak. We got to just go and watch price action. Price action is going to give you the story. If we break the minor trend, we may kind of relapse into a major trend. All these areas with these wicks are potential retest areas. You got to look at it in the details, right? All this could be a potential area that we come back to reject to. If it's not this one, maybe this one. We can clean it up to the here, body to wick. If we clean it up there, body to wick. It's all about these little details for your optimal entry. I hope this kind of helped you. I got to keep my eyes peeled for a trade and for a setup because we're retesting right now, and I got to get ready for the team, but I hope this helped you. So when I first started, this is the trading plan that kind of made it all the difference for me. So we're going to kind of focus on this, right? You can see over here, this is all your confirmation checklist. This is everything that you're going to need to buy. You need a minimum of 2 of these, but obviously the more you have, the better it is for you in all retrospect. We have buying at a higher low. Are you selling at a higher high? Do you have a trend line? Do you have a supply and demand zone? Do you have a QP? Do you have a candlestick pattern, bullish engulfing, variation, things of these natures? Do you have market structure? Do you have a fib level? Are you buying at a support level? Are you buying at a resistance level? Time frame correlation. Are your time frames adding up? And again, candlestick patterns. You see, we have candlestick patterns on here twice, not just for your entry time frame, but where you actually are. Now, let's get into the trading plan, right? 20 to 30 pips. This is what I started off at. Kind of almost, you could perceive it as scalping, but scalpers really only catch like 10 pips. Obviously, if we're catching 30, we're some type of day trader, right? So 20 to 30 pips per order or trade didn't close. What that means is for every fucking entry that you put on this motherfucker right here, that if you get an entry, for example, let's use our entry tool. Where is it at? Because I don't remember where it's at. Right here, right? Let's say we enter right around here at this QP. For every entry, once you get 30 to 20 pips, you close, which means that you have a tight risk to reward, so that way you at least get a 1 to 2, right? That's essentially what this is saying. You could risk more, but then it's gonna change your probability. Probably no more than 15 pips because it's still gonna be a 1 to 2 in this retrospect, right? Let's go back to the PDF. Downtrend. Downtrend market, you're making sure that you enter on a lower high, right? Downtrend, you wanna make sure that you're buying at the highest point. Uptrend, you're making sure that you're buying at the lowest point, which is your high or low. Time frames, we understand that the monthly, weekly, and daily are time frames that we're gonna go ahead and draw our main structure. Anything from the 12-hour to the 1 hour is where we are in between there. And then obviously I say M45, M30, ESTC, right? These are some things that I had to remember at the time because this is where I was fucking hard-headed and greedy was kicking me in my booty cheeks. So no retest, no entry. What does that mean? Right now, we're doing a retest. We're doing a market structure retest. If we didn't do this and we kept on going up, we were gonna make the higher high and probably come back down here anyways, potentially. So I'm glad that we're doing this shit now because we're setting up for a buy in the next couple of minutes, which is amazing, right? No retest, no entry. If the market doesn't come back down to where it needs to retest, you do not enter. You can catch a continuation trade. If you catch a continuation trade, make sure you follow your motherfucking trading plan to the T or else you will die in the markets. Just letting you know from experience. Cool. Have patience. Sometimes you got to sit on your hands and watch. Sometimes it's better to sit on the sidelines. Does that mean that you're not doing shit? Fuck no. You're marking up your charts and you're making sense. You're paper trading. You're doing all the markups. You're back testing and you're paper trading in real time to make sure that you understand what you see and you're sitting on your hands and letting the market show you and you're literally updating everything as it happens, interpreting the data correctly. That is patience. Cool? Then lastly, we're going to do adapt and not react. Motherfuckers, I see y'all guys cook yourself all the time. If this was a move that kept on going, you know how much of y'all would have chased this move because of volume kind of coming into the market? Oh my God, it's flying. No, stupid. It still has to come back and make the motherfucking retest. So wait. Do not again. What does this shit say? Adapt, not react. You guys are not reactionists. You are not the impulsive people. This is not a game where you be impulsive. This is a game where you wait for what you need to see. You can see my setup is actually playing out in real time right now. And this is why we wait, right? If I would have took the trade from here, I would have to risk 20 pips, right? If I'm risking this fucking much, the reward has to be bigger. Don't do that shit to yourselves. If you're in profit and you hit 50 pips, and if you haven't closed out 50 pips ever before in your fucking life, and you risk 20 pips or 50 pips, and you don't close out 50 pips, you're fucking dumb. I don't care what you say. This game is a game of consistency. Consistency buys you your freedom, not the money. If you haven't been, here's my rule of thumb. If I'm consistent with catching 30 pips every day for at least 2 weeks, then I upgrade and I start catching 50 pips. If I'm consistent catching 50 pips from the market without too much losses for 2 weeks, then I upgrade to 60 pips. It's a game that you slowly build yourself up based off of your endurance and what you're doing in the markets. You don't just graduate yourself because you feel like it. No, stupid. You fucking take your time. Sorry for the vowel language, but I have to tell y'all this because I know how y'all think if you're watching this because I was you too. Don't do that shit. Don't make the trading process harder for yourself. Don't add on more time because you want to take shortcuts. Go through the process. Beginner, intermediate, advanced. I'll see you on the other end, bitches.